Starbucks has released preliminary results, and even though the numbers were just garbage, the stock did not react all that negative to it. Now, Starbucks is part of the growing quality portfolio, even as the stock has a weighting of only 2.4%. And even though the stock fell an initial almost 10%, it quickly recovered towards being down about 5%, even down as little as 3%, and right now we are down almost 4% in pre-market. So in this video we will check the numbers, how this compared to what analysts were expecting, and what I think of this holding right now. Now, the markets will most likely be open once I'm done or almost done filming this video, so we may just check back in with the stock to see how it is doing when trading actually starts. Now, the earnings that Starbucks just released, this were not the full numbers. This was an early release or a preliminary result. Now, why do companies do this? For this we can check this article by David Galusdian. And Dave from AlphaSense says there are several reasons for a company to pre-announce its financial results, or to provide the street with a preliminary high-level understanding of what the company's quarterly performance will be. Typically, a pre-announcement is made in the weeks preceding the full earnings release, which is also in this case. The full earnings will be released next week. And conference call. Management may also decide to update investors with preliminary results ahead of its investor days, investment conferences, and major acquisitions. This allows conversation on current financials without violating regulation fair disclosure. The question is more complex than simply whether to make a pre-announcement. However, many considerations contribute to the decision on what information to include and whether to produce an early release at all. So in the case of Starbucks, why would they pre-announce their earnings? Well, because they were horrible. They were so bad. It's kind of incredible. They were such trash. I hold stock, so I think I can fairly say that. But if we look, we see revenue for the quarter that ended on September 29th, 2024. Well, it was down 3% to last year. If we look at it for the full year, we see a positive change of 0.6% in revenues. These earnings were not good. And year-over-year change in quarterly results of minus 3%. That's bad in and of itself. However, the actual numbers, when we look at it further, the same store sales and everything, that's where the real issues come. Because for the fourth quarter of fiscal year 2024, the global comparable store sales declined 7%. Same-store sales, comparable same-store sales were down 7%. And consolidated net revenues declined 3% to 9.1 billion, or a 3% decline on a constant currency basis. GAAP earnings per share is 80 cents, down 25% over prior year. EPS is down 25%. Non-GAAP earnings per share is also 80% or 80 cents, declining 24% on a constant currency basis. Now, they continue by saying the company's results were primarily driven by softness in North America's revenue in the quarter, specifically by a 6% decline in US comparable store sales, driven by a 10% decline in comparable transactions. I mean, this is really, really bad. Partially offset by a 4% increase in average ticket. Okay, so the people that are still coming, they spend 4% more per order. So at least there is something good in here, right? The accelerated investments in an expanded range of products offering, coupled with more frequent in-app promotions and integrated marketing to entice frequency across the customer base, did not improve customer behaviors, specifically traffic across both Starbucks Rewards and non-Starbucks Rewards customer segments, resulting in lower than expected performance. Additionally, now this is where the real fun comes, China comparable store sales declined 14%, driven by an 8% decline in average ticket, compounded by a 6% decline in comparable transaction, weighed down by intensified competition and a soft macro environment that impacted consumer spending. So, the US is the largest market for Starbucks, and this is doing absolutely terrible. Luckily, the second biggest market for Starbucks is also in the trash. So, yeah, let's just keep it at that. Now, for the full year of 2024, global comparable store sales declined 2% and consolidated net revenues increased 1% to 36.2 billion, also a 1% increase on a constant currency basis. GAAP earnings per share is $3.31, down 8% over the prior year. Non-GAAP earnings per share is also $3.31, declining 6% on a constant currency basis. Yeah, that's not good. The lower than expected performance for the full fiscal year was a result of pronounced traffic decline, including a cautious consumer environment and our targeted and accelerated investments not improving customer behaviors, as well as the macro and competitive environment in China pressuring our results further. Now, then there are only two more things to go through here. Given the company's CEO's transition coupled with the current state of the business, guidance will be suspended for the fiscal year 2025. This will allow ample opportunity to complete an assessment of the business and solidify key strategies while stabilizing and positioning the business for long-term growth. Now, this is fair. I also didn't mind they doing this at Nike because we have a new CEO. How can he be steering the company to where he wants it to be if he got all these performance obligations from his predecessor? How should he fix the business to what he thinks is the best possible way, or in the best possible way, if he cannot see what he finds important for it? So pulling the guidance is something that I really like, I think is fair, and I don't mind them doing. Now, what I do mind is that they say, with the strategic reset underway, the company remains committed to creating shareholder value and is announcing that its board of directors approved an increase in quarterly cash dividends from 57 cents to 61 cents per share of outstanding common stock. The dividend and its related increase demonstrates the company's confidence in long-term growth. Now, why? Explain to me. Why, if your earnings per share is down 25% year over year, you are increasing the dividend by 7%? Explain the rationale behind it. Is it because you want to show confidence? I don't know, but this seems like a unthoughtful thing to do, in my opinion. Just raise it by 1% or 2%. Keep that growth going for the statistics. I mean, I understand why you do it as a company. I understand you want to show that you still have confidence. By increasing it by 7% while your earnings per share are declining at the rate they are doing, that's a bit of a tough sell for me. However, what might be a bit of a less difficult sell for me is that if you enjoy my videos and you find them educational, please make sure to hit that subscribe button and like this video. Help me get towards that 1,000 subscribers before the end of the year, because I really hope to get there. But that was just a small announcement in between. Now let's get further on with the video. As we can see, we had the Starbucks reports preliminary Q4 and full fiscal year 2024 results. That announcement we had. This is the same as this one, but the actual earnings are still scheduled for October 30th. This is where we will have the webcast and where we will hear from Brian Niccol himself, the new CEO. However, we did have a video presentations and some prepared remarks. Well, yesterday basically. And I mean, they were strong, but it was pre-recorded, right? This is always something that undermines it a bit, but they were quite strong. And what he said was very optimistic for me. He wants to focus on the US first, because that's their biggest market, of course. It's their home base. And he does not neglect the full around the world, around the globe picture here, but he wants to focus on the US first. And I think that's a good thing. But there are some things we need to talk about with this turnaround play. Because I like falling knives, right? I bought PayPal, I bought Lululemon, but Starbucks might be a bit different. And I don't know whether I should keep this stock in my portfolio or not. Now, why is this? First of all, this is not just a broken stock. This is not just a stock that's been trading down based on fears. This is a stock that has been trading down based on actual issues. I mean, these same-store sales are basically skydiving towards or together with the EPS numbers. And the brand around Starbucks is just not that good anymore. Now, Brian Niccol in his pre-recorded video highlighted toward that they wanted to be the community coffee house, I think about 27,000 times in the span of just 5 seconds, because it was absolutely crazy. They really want to focus on being that. And that's good, because that is what they have historically been and why they have been so successful. But he did say it a lot, and I mean a lot of times. And I mean, in all honesty, I also do think that this role really suits him. And to me, it came across as if he wanted to have this job and he has been looking for the opportunity to get this job. And I mean, that's of course not what I know or something I actually know. It's just how it kind of came across to me, how he was speaking. Now, I wanted to go through the expectations for the Starbucks earnings together with you. However, when we look right here, we can see with these sales and with this part, the estimate that it has been completely stripped towards the preliminary results. So that's a bit disappointing because this kind of would have shown how good or how bad the actual numbers were. But what we can see at this moment is that Starbucks is now trading at, well, not that bad of a number. All in all, it's down about 0.8% as the market is opening up. So that's not bad actually. I mean, that's certainly way better than I expected because I thought it would just adjust downwards. So it being around that, well, negative 0.8, negative 1% number, that's actually quite good, especially for the numbers they reported. Now, why could this be? I think due to that video, due to that recorded video in which Brian Niccol also announced that they will discuss all the numbers in the webcast, in the earnings release, earnings conference when that happens next week. Now we also have a bunch and an absolute bunch of price target adjustments, which may help with the story. Because if those numbers were so bad, you would expect the numbers to be turned down or revised down quite significantly. However, this is mostly not really the case. And there were even some price targets upgrades. Now, not really analyst rating upgrades, but price targets upgrades. Now, I want to just show you them because at first we have Goldman Sachs adjusting their price target on Starbucks to $105 from $110, but they remain or they keep the stock at a buy rating. Then we have Gordon Haskett. They adjust the price target on Starbucks to $88 from $100, but maintain a hold rating. And I think, in all honesty, this is one of the larger down steps in price targets that we will see, because we have Citigroup adjusting their price target to $96 from $99, Stifel adjusting their price target to $105 from $110, and TD Cowen even holds it at $110, so they keep it stable. Now, then we have the first upgrade from Deutsche Bank, which adjusts the price target to $120 from $118. Now, I do think they are the highest price target out there right now. And I think $120 is quite enthusiastic, especially given how bad of a result we have just seen. Because the sentiment would need some really big improvements in order to go up. And we saw some Brian Nickel magic in the share price already when he was announced as the new CEO. But $120, that's like a, 23% upside from here? That's quite a bit. So I don't know about that one. But then Guggenheim, they give an incredible price target increase because they give it now a $93 price target, up from 73. But with this increase, they do maintain a neutral rating, which I find a bit odd if you increase your price target by this extent. And then lastly, we have UBS adjusting their price target on Starbucks to $95 from 85. So all in all, we do see a lot of price target increases. And I think that is what you see reflected in the share price right now, why the stock is not down as much as it could be. Now, with that being said, I know this is somewhat of a shorter video, but I hope you enjoyed it, and I will surely review their earnings next week. Now, tonight, Kering is releasing earnings, so maybe there's a video tomorrow. Maybe it will come Friday. I'm not fully 100% sure yet. But for now, thank you for watching. Please make sure to subscribe to my channel. Help me reach that 1000 subscriber mark. And I hope to see you in my next video. Bye.